Imagine a company that's been around for over 4 decades, serving some of the world's most critical industries: power generation, transportation, and energy storage. That's HBL Engineering Limited, also known as NUN, listed on India's stock exchange. This Indian powerhouse is all about batteries, power electronics, and spun concrete products. They manufacture everything from lead-acid batteries to lithium batteries, railway signaling electronics, and even electric drive trains. But what really sets them apart is their innovative approach to energy storage systems, which can be used in a wide range of applications, from cars to data centers. The company's market capitalization is around 159 million rupees, with a profit margin of just 14.9%. That's an impressive track record, considering the challenges they've faced over the years. Despite their success, HBL Engineering Limited has been quietly building its way up through the stock market. Their dividend yield is a modest 0.09%, but that doesn't mean they're not generating strong returns for investors. In terms of financial performance, HBL Engineering Limited's revenue has been growing steadily over the years. They've managed to keep their debt-to-equity ratio under control, which is a sign of solid financial management. But what really interests investors like you is the company's future growth prospects. With a market capitalization of 159 million rupees, there's still plenty of room for HBL Engineering Limited to expand its product portfolio and tap into new markets. And with their innovative approach to energy storage systems, they're well positioned to capitalize on growing demand from industries like data centers and electric vehicles. So why are investors interested in HBL Engineering Limited? It's simple: they're looking for a company that can deliver strong returns while also generating decent dividend yields. With its solid financials, innovative approach to energy storage systems, and growth prospects, this Indian company is definitely worth keeping an eye on. This is not financial advice. Please do your own research. Use this information at your own risk.